So we shall start. We are going to start in few seconds. Okay, so let me just um, prepare my tools. All right. So good evening, good afternoon once again. I hope you are all doing great and you are spending your weekend well. So today we are going to learn about how to set three different strategies in our Royal Q application, ladies and gentlemen. You know, we have some of our downlines that sometimes they are struggling to set their strategy. They have sometimes not good results, and sometimes they are also stuck on their trade. So it depends on the settings, how they do it. If you don't do your proper settings and you don't manage your portfolio, you will always be stuck, and maybe you will think that Royal Q is not working, but it is working perfectly. You need to do your proper settings according to your capital. Don't compare results. Don't compare your results or your strategy to somebody who maybe has a huge capital, maybe has 5,000 or 1,000 or 10 or 15,000 above. You cannot set the same strategy with a person who have uh, huge capital. So you need to set according to your money that you have in your exchange. So, ladies and gentlemen, what I'm coming to share today, if you want to use it, then you use it according to what you have in your portfolio, not according to what I have in my portfolio. Okay. So I will share my screen and we'll go for it. So I want to know before I start, am I loud and clear, please? Am I loud and clear? Let me see whether I have co-host. Okay, someone has raised hand. If I'm loud and clear, may you put one in the chat for me to know, please? Okay, great. I'm loud and clear. So let's go. So ladies and gentlemen, I will share my screen. May you pay attention because it's very important when you come in Zoom. You're supposed to pay full attention. Don't have one leg out and one leg in. If you are such a person like that, you will never know, or you will not, you will be like you are distracted. Okay, so let's go, guys. So I'm coming to share my screen. May you forgive me if maybe I speak some wrong English. May you understand me in advance because I am both French and English speaker. So sometimes when I'm speaking, I mix the French in my conversation of English. So I'm coming to share my screen. Here is it. I will share it. Then bingo. Okay. So first of all, I will see and make sure that my screen is in English. So if maybe I'm talking and I'm out of the Zoom, may you alert me, my co-host, if I have co-host there, may you alert me or chat me in private for me to come back in the Zoom. So wait, I'll put my screen in English. Then we are good to go. Okay, great. So ladies and gentlemen, in Royal Q, we can set so many strategies. And we have three of them that are the best. They are best strategies. So the number one, which is the first best one, is the strategy that we call double up. And this strategy, Royal Q has introduced it automatically in its system, which is the default system, okay? And it is called the Matringer strategy. you can notice that if you are going to buy a coin, or if they send a signal and you want to set it. For example, let me come here. Okay. For example, I will use the spot market to make the example. Okay. And this strategy that I'm coming to share to you is really, really sweet when you are trading in the spot, because in spot, there is zero risk. The only risk in spot is you trading the coin and the coin the exchange decide to delete the coin. So in that way, you don't have any choice than to sell it either at loss or to transfer it to another exchange if it is there or it is existing in other exchanges than the one that you are using. But if there's no choice and maybe that coin is not in another exchange, then you don't have any choice than to sell it and take the money to maybe buy another coin that is at the same lower price and wait again for it to go higher or up in value. Then you sell and take your money. Okay, so that is it. But in future, you have to be very careful because future is high risk. In future trading, uh, we make big, good, huge profit, but with high risk. If you are too much greedy or you make you don't make how do you call it, a proper uh, settings for your trade. So, ladies and gentlemen, allow me to share my screen. So, I repeat what I'm coming to share. The strategy is really, really sweet when you are trading it in the spot market. Don't forget, we started spot market before Ryok introduced this future. Later introduced the future strategy, the future trading. Okay, so I will start with the best of the three strategy. We have the double up, we have the Fibonacci, and we have the 1+1. And it's very important to know how to set all these three strategies if maybe you decide to change one to another strategy. Okay, so let's go. So I will make the example. Let me have my book here. I will make the example with 200. Then it's up to you to, adjust it or edit it if you want to, yeah, use it for yourself according to your capital. Okay, according to your capacity, according to what you decide to, how do you call it, to trade with as capital. So here we go. I'm going to mine. Let's say we are going to set for the first time the strategy, which is the double up. Okay, I hope you are paying attention. I hope you are following. I hope we are together. Let me see. Okay, we are together. Great. So let's go. So, ladies and gentlemen, when you come on your Royal Cube, you will see what we call the home page, strategy, circle, news, and mine. I'm taking my time to explain. I won't be too much fast for the new ones. So get a proper understanding. Okay. So you come here on mine. When you come on mine, you tap on the mine. Then you scroll a little bit down. Then you will see what is called my strategy settings. Yeah. Okay. My strategy settings. So when we tap on my strategy settings, you will see that on this account is a new account, or this one is a new account. Okay, account of less than 1 month. So when you come here, you will see that there are already two strategies there. Okay, two strategies are already there. Strategy of $50, strategy of 1,000. Okay, so if you come for the first time and you don't have any strategy, you will see here, you will see nothing here, but you will see what is written here. Add it now. Add it now. Okay, so you tap on the add it now. But if you have already created some strategies in the system, then you don't need to delete your strategies, because remember, you can use many strategies as possible. If you use strategy A and maybe it's giving you slow profit, you can move to strategy B, strategy C, or strategy D until you fall on the one that is good for you. Okay. So I'm typing on the plus here. When I type on the plus, we shall give a try with either $5 or $10 and see how much will it lead us to. Okay. So here I'm going to start with the small capital, which is $5, because you need to also think about people who have small or short pocket, not the big pocket. Okay. So I'm starting with small capital. Then if you decide to invest big capital, then you have to double what I'm coming to share. You have to double it to get what maybe you want. Okay. So we shall make the first buy amount $5. Okay. But before you put the first buy amount, you have to give your strategy a name. You have to personalize it so that as a disciplined trader, once you go for it, you will know that this strategy is for this amount of money. This strategy is for this margin call. This strategy is for spot trading. This strategy is for future trading. Okay. So I'm typing on it. You tap on optional. This remark, optional. When you tap on it, then you give it a name. You can say capital 200. Then you put here double up. Okay. Double up. So if you see this strategy, you know that it is strategy of double up. It's called double up. It means you are, or the settings that you are doing, you are doubling. You are double the next call or the next buy. So double up. We are going to give it a name. Double up. Double up. Okay. Capital 200 double up. Now the capital of 200, we are going to divide it to instruct the robot in a way that if you pick it, may take maximum 200. It means by putting this amount of money, I'm instructing my robot, if I choose this strategy, may you invest the 200 maximum, not more than maximum. But it doesn't mean that the robot will use all the 200. It's not by force, because if it starts with the first buy amount, maybe on the way going during the trade, the coin can increase up to the percentage that you instruct the robot to sell, then it will sell it. It will not use all the money. But in the worst case, it means the robot is going to use all the 200, but not more than the 200, unless you come and open more margin calls on it. I hope it's clear for you. So double up 200. Then we are going to try with first buy amount $5. Then when we try it, we will all go on the calculator and calculate the total money, whether is it 200 less or 200 more than 200. Okay. So first buy amount $5. Remember, anything that you put on your settings, you can edit it at any time. So $5. Then here, margin call limit. Let's put 9. I'll put 9 margin calls. Okay, we can change it because as I calculate it in advance, it's 9 margin calls. Then the whole take profit ratio. It means, dear robot, any amount of money that you will put into the cryptocurrencies that I'm going to choose, the cryptocurrency of my choice or the signal, by me choosing this strategy, I want any amount of money that you will take from this 200, or if it is the total 200, I want 1.3% profit. That is what this part means. So you can change this part at any moment according to the signal that you pick, or according to the direction of the coin, if you make your technical analysis or you make your analysis on it. Okay. So here, if you are trading in spot, then I will advise you to put 1.5. Okay. It means I want fast profit and work out fast from the market. But as I said, If the signal says 2%, you put 2, you come and change only here. If it says 3, you come and put 3 here. But let's start it with 1.5. Then the next 0.3, it means, dear robot, the amount of money that you put on the coin. I want 1.5%. But anytime the coin hits 1.5% and still going up, leave it, may it go up. Leave it, may it continue going up. If it either reach 10 or either 20% or 5 or 15 or whatever percentage it hits, may you wait for the coin to start dropping down from where it is. Drop down to 0.1%, negative 0.1% before you sell it for me. That is what it means. But if you put here 0, it means, dear robot, I want you to give me the exact 1.5%. I don't want more, I don't want less. So by putting a number here, it means it's at the same time benefit for you. And if it's hit that 1.5 before dropping down, then it will minus 0.1 from the 1.5%, then it will give you 1.4.99%. That is what it means, because any profit that it hits, if it starts falling down, it will minus this 0.1 from the percentage where it hit before it will give you the results as profit. Is that clear for you? Because that part, many of the traders don't understand it. So let me see in the chat. Is that clear for you? If it's clear, put 1. If it's not clear, you put 2. Then I'll repeat it. If it's clear, I want to see some 1. We are 80 here. If it's not clear, then you put 2. Okay, that is clear. Great, let's go. Don't be shy, you, because if you are saying 1, you are putting 1 because people are putting. That one is called, you follow. They say, so I will follow their say. I will follow their say. Then tomorrow you will not understand it. Don't be shy. If you don't understand, we are here. Today is weekend. I will explain it well for you. Don't be shy, because if you are shy, tomorrow you will go home, everything will scatter in your strategy while other people are making the profit. So I'm saying, yeah, follow. I'm seeing some 2 in the side chat. Okay. If you are shy, you will be broke. But let me explain this part, because I love, this is my favorite part. Any result that you see me sharing, giving me 20% instead of 1%, this is where the profit, the good profit comes from. Okay? So I'll explain, I repeat. This part means, dear robot, all the total amount of money that you will invest on that particular coin that I'm going to choose by using this 200. Either you take 150, either you take 100, either you take 20, either you take 30, either you take all the 200. I want 1.5% of it. Now, that's 1.5%. If I put this, dear robot, may you let the coin go to where it is going, if it is going up in percentage. If it don't, it hit this 1.5, leave it, make it go above the 1.5, make you not sell. Leave it, make it keep on going. And there are some coins, before you know how far, they go to 10%, 8, 7, 6. And if you limit the robot to buy at 1.5, you will lose that opportunity of 8 or 7% or 10%. And in that case, you will now see the coin going up. You will say, this one there is going to heaven. Oh, let me go and enter. Then when you enter, it carry you to hell. Are you seeing it? So that is the mistake that many of us do, or we did in the past. So please take this part very, 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 very important, okay? And very serious. So dear robot, instead of you to limit yourself to that 1.5%, I want you to leave the coin. If whenever it is going up, make it go up above the 1%, above 2. If it's going up, let it go, let it be, let it go. Don't sell it. I want you to only sell once it starts dropping down from where it is up there. Then you minus 0.1% from that total percent where it hit. So it means if this coin hit 10%, the robot will not sell 1.5% for you. If from that 10% it starts falling down, it will minus this 0.1 from that 10% and give you 9.99% profit instead of 1.5%. Now, is it clear? Let me see in the chart. Is it clear? I want to see total 1 because I have explained it well. Is it clear? Please, if it is clear, I want to see 1 in the chart. If it is clear, I want to see 1 in the chat. 1 in the chat. Thank you. So today I want everybody to understand the settings. It's very, very important. If you understand all these settings here, then you can be playing with your strategy and make good profits. You will make good profit, especially in the spot market. Okay. Okay. Now, so may you minus this, then it will give you. Sometimes you will see that your take profit is 1.5%, but you will see 3% profit. It will say 3% or 4% or 5%. Okay. Now, the next one here, 0.5. I will reduce it and put 0.1. It is the same thing, but in the opposite way. Remember, I put 9 margin calls here. So it means, dear robot, the same way if the coin is going up and I want you to wait for it to drop before you sell, may you minus this before you sell. The same way, if you want to buy the next call, which is this place, I'll show you here, the settings here. The next call in the margin call drop. If you want to buy the next call, maybe you bought maybe third call, okay? Third margin call. And the next buy is the fourth call. So whatever percentage or whatever call drop I put, which is here in the margin configuration, dear robot, if even though I put call drop negative 1.5%, if the coin is dropping, which is this part, I'm explaining this part now. If the coin is dropping, if it drops to that negative 1.5%, don't buy, don't rebuy, leave it. May it continue the dropping down, may it continue falling down. So wait until it starts going back up. Then if it starts going back up to plus 0.1% before you buy the next call from it. So you see, this one is for when it's falling down. This one is for when it's going up. Is that clear? I hope it is clear because it's very, very, very simple. Let me see someone in the chat. I want to see someone in the chat if it's clear. The two ways that I explained, it is the same work, but the other one stands for when it's going up, and the second one stands for when it's going down. Okay, I hope you are getting it. So please, if we finish this Zoom, I want everybody, when they send a signal, you pick a good deal, come and testify that you applied it, you understood it, and it is working. Okay, so this one stands for when it's going down. This one stands for when it's going up. It applies for up. This one applies for down. Now this part, the third part, this part 0.3, it applies for here, distribute and take profit allocation. Let me tap on it for you to see. You see here, the default settings say 1.3, 1.3, 1.3, 1.3, 1.3. So this one stands for the fifth buy. The fifth buy. Remember, I put 9 margin calls. So the fifth margin call, it means this fifth margin call, the first buy amount, which is $5, doesn't count in it. The first buy amount is separate. So from the second buy, you count it first call, second call, third call, fourth call, fifth call, up to 9 call. So what I'm coming to explain now stands for from this side to down. Okay. So here you see the default settings say 1.3%. So it means this third 0. Whatever I'll put here, if I put 0.1, it stands for this side that I share now, which is the allocation, the distribute and take profit allocation. Dear robot, which is here. Dear robot, my partner, whenever you start buying the fifth call, 6, 7, 8, and 9. From the fifth buy, any amount of money that you put there, before you sell it for me, also leave that place, which is the sub sell. Leave it. That 1.3% that I put, you leave it. If the coin is flying, leave it to make it fly. If you go wherever it wants to go, may you wait for it to start falling down. Then you minus this 0.1 from it before you sell from it. So this one stands for the sub sell. The sub sell, which is the margin call sells. Okay. Then here I will tap on it and let it be on one shot. Okay, so I have explained everything. Now we are going to the details of the 9 calls, which is the 9 parts that it will divide, because remember the capital is 200 and it will start with $5. So the remaining $195, we are going to set the how do you call the division, how to divide it. Okay, so I type margin configuration. Now you see why I said the double up is the default settings of the robot, because it is the best of all. It's because we as traders, it's not all of us that have the big capital to do this settings. That's why we do it according to what we have. Okay. So now we are going to use the robot default settings, but we'll use, according to the 200, we'll use only the double up on this from the first call to the fourth call. Okay, the first call to the fourth call. Then the remaining money, we'll divide it and spread it to the remaining of the 5 margin calls. So please follow it well. Now, here at the left side, you can put the, how do you call it? The call drop as you want, the call drop to your choice, or according to the how do you call the movement of the coin. Okay, so here we will set it, but that set is like temporary settings. So if they send the signal and they say the margin call drop, you have to make it 5%, then you come and edit here. You don't need to be always changing your strategy, delete and re-put, delete. No, all you need, you have your strategy, but if they send the signal, you edit it. After buying the first buy, you come and edit it, then you save it, then finish. Okay. So now at the left side, we are going to make what we call the margin call drop. So you can make here, for example, the first call, you can make 0.5. Okay. Second call, you can make 0.6, because if you are setting your strategy, I learned it from our coach Musa, and it's good. It's a nice strategy. Before, we'll be seeing some people, even me, we'll be doing 0.5, 0.5, 0.5, 0.5, 0.5, or 1%, 1%, 1%. No, it doesn't make sense, because remember, the robot is created to make you get the money. So you have to instruct him to give you the more money. So it means when a coin is falling down, what matters there is for me to buy the next buy at the cheaper price, more cheaper than the previous buy. I hope it is clear. I bought the first buy. So it means for me to buy, or for the robot to buy the next buy, I must make sure, may he collect more quantity of the coin here. If here, maybe he bought the $5 and it gave, how do you call it, 2 pieces of the coin, it means for him to buy here, I must make sure to get 3 pieces. Here, I must make sure to get 4 pieces. I must make sure to get 5 pieces. You see? So by putting progressively the call drop, by increasing the next call, it means each next call must be bigger than the previous call. If here is 0.5, the next call, you have to make sure it must be bigger than the first call. Same thing here. Here must be bigger than here. Here must be bigger than here, until you end it. I hope it is clear. Let me see in the chat, because you have to also know that one. If it is clear, I want to see some yes. Is it clear for you all? If it is clear, I want to see some yes. Each call drop that you want to set, you have to make sure the next call drop must be bigger than the previous call drop. Don't put too much difference, but you have to make sure it must be bigger than the previous call drop. It is very important, and it will make you get more quantity. But if you put the same thing here, 1, 1, 1, 1, it means you are getting the same pieces. Here I'll get 2 pieces, here I'll get 2 pieces. It doesn't make sense. Okay, so this is an example. You can change it according to what the signal says. So 0.6, here you can make 0.7. Then here you can make, if your capital is small, you can make here 1%. Here you can make, how do you call it? 1.1, you see, 1.1. Here you can make 1.2. Here you can make, you see, I'm changing it progressively, 1.3. Then the two last call, you can increase it, because if a coin, if a signal or a coin that you are trading is not selling, the robot is buying up to the 5, 6, 7 call, then it means the coin is dropping down. So why won't you increase? You have to increase the next one for you to get more quantity of that coin, because what matters is the quantity, not the money. Okay. So here the pieces. So here you can put 2%, then here you can put 2.5. Okay, 2.5. As I repeat, you can change it according to what the signal says. Okay, so now the most important part, the right side, we are going to put the double up here. Okay, so from first call to the fourth call, it must be like this, because you are doubling it. Yeah, it must be like this. First call drop. Remember, the first buy amount is $5. So, dear robot, as you bought the first buy, $5. So, if the coin start falling down, may you multiply the $5 times 2 for it to be $10. So, it is 2 times. So, 2 times means here $10. Now, the next buy, if it's still falling and it doesn't go up, that same $5, may you buy times 4 here, which is 5 times 4, $20. You see, the third call, if it's still going and dropping, may you buy times 4, which is $5. Sorry, $5 times 8, which is how much? 5, 4, 20, 5, 8, 40. Are you getting it? 40. You see, so you are doubling it. So that Matringa strategy that you'll be seeing when you are going to buy your coin, before you tap on, how do you call it, create, the robot has put it already there. It is already there automatically. It means it is the best. That's why anytime you come on the screen at that step, you will see the Matringa strategy there. Okay, so which is times 2, 10, 5 times 4, 20, 5 times 8, 40. Now 5 times 16, which is 80. So it means each call drop, you double it. I buy times 2. Then the next call, 2 times 2, making 4. The next call, 2 plus 2, making 4. The next one, um 4 plus 4, making 8. The next one, 8 plus 8, making 16. So you see, it continues up to 128 times. But as we don't have the 128 times, so we can limit ourselves to the 16th time. Okay, yeah, to the 16th time. So let's calculate it. 2 plus 4 plus 8 plus 16. How much will it give us as results? Okay, here we are going to calculate it in the calculator. So here you make it like this. 2 plus 2, 4. Okay, 2 plus 2, then 4. 4. 4 plus 4, then 8. Okay, 8 plus 8, then 16. 16, how much? It is 30. You see, 30. Then 30 times what? 30 times the first buy amount, which is $5. So here we are getting 30. We are getting 30 plus 5, which is $5. So it means, sorry, I'm mistaken. Let me delete it. 30 times 5, which is the first buy amount 5, which is $5. 30 times 5 will give you 150, okay? Which is the first 4 margin calls. It will give you 150. Then you add up the first buy amount, because remember, the margin call, the calculation of the margin call is not including, the first buy amount is not including in. So you add the first buy amount, $5, which will give you 155. So if you minus 155, wait, if you minus, let me delete it, sorry for that. Let me delete it. 200 minus 155 it will remain $45. You see, it will remain $45. Remember, the margin call that we put there are 9. Now, from the first to the 4, it takes you $155. Then the remaining $45, you spread it to the remaining 5 margin calls. So let's go there. So here you see from here, first call to the fourth call, first call to the fourth call, it's using 30, which is 30 times. So 30 times 5, it will give you a result of $155. Then the remaining $45, you spread it to the 5 remaining margin calls. So here, which is from the 5th call, you can make here 1 time, because the money remain 45. 1 time, and 1. So 1, 2, 3, 4, 5 is how much? Let's calculate it. I hope I am not making a mistake. 1 times 5, making 5. So 5 times 5. Okay, 5 times 5 is giving you $25. Okay, 5 times 5 is giving you $25. So it will still remain how much? It will still remain $20. So the remaining $20, you can share it here. Okay, so let's say let's go and calculate it again. I want us to calculate together, then we'll get the good results. Then everybody will understand it. So it remains $45. And the $45, we have 5 margin calls. Okay, 5 margin calls. So 10 times 5 making 50. 10 times 5 is 50. So we'll make here, we'll double it. Let's make here 2. We can make here 2. Okay, we make 2. We make 2 here. 2. We make 2 here. 2. Meaning this 2 that I'm putting is the remaining $45. 2. Okay, so 10 times 1, 2, 3, 4, making 40. 40, because the first buy amount is 5. So 5 times 2 is $10. So $10, $10, $10, $10, making 40. Then here it will remain $5, which is the $5 on the 40, giving $45. So here you leave 1. So that is it. So if you calculate here, 1, 2, 3, 4, which is 8. 2 times 4 making 8, plus 1 making 9. So this 9 times $5 will give you $45. So you see here, $45 plus this place. Here to here, 155, making $200. Then you confirm it. So when you confirm it, ladies and gentlemen, you can save it. But if you save it, I want you to know and understand that this part is the part that can give you good profit, extra good profit. So if you pick the coin or they give you the signal and the signal goes against you, remember in spot market, we don't lose anything. If the signal goes against you, deep down than what we expected, you can come here and increase it, which is the sub sell. You will increase the distribute and take profit allocation. You can put 1.5, 1.5, 1.5, 1.5, 1.5. Sometimes if the signal, the coin goes deep down. Remember, if the coin goes deep down, it will definitely go higher up. So you can be greedy at this part, because if you waste your time, then you have to eat the money from it. Okay, so you put in between 1.5 or even 2%. Sometimes I see some traders, they put 5% here. Then you save it. So for the meantime, for the first time, you leave it at the default settings, which is 1.3. So now I will save it. Then, yeah, I save it. So this is it. The strategy is here, the double up. So let's see whether everybody understood it. Then we move to the second strategy. Is that clear for you guys? The double up. This double up that I made, the first buy amount is $5. So the $5, if you use this strategy, it's going to give you, it is going to take your 200. Now, if you have big capital and you want to increase it, maybe 400, then you have to make the first buy amount $10. Okay, now let's move to the next strategy, which is the Fibonacci strategy. We call it Fibonacci strategy. Okay, so I type on the plus, I will tap on the plus, then I also gave it a name. I will say Fibonacci. Okay, Fibonacci settings. So the double up is the best, the Fibonacci is the better, and the 1+1 is the good. Okay, so now we are going for the Fibonacci strategy. So let's say we want to try with, let's start with $10. You know, you can give everything try. You can try with $10, $5, or $20. So let's say first buy amount is $10. Okay, $10. So here we will calculate and see how much will be the total money before we come and put and give it the name here. Okay, so first buy amount $10. And let's say we are going to use the same default settings. Margin call limit, let's put 7, okay? Because if you are trading, remember, you make the extra money from the 5th margin call. Because if you limit yourself to first to 4 margin call, the robot gather all the 1 to the margin call 4 together and sell it at once to this profit that you put here, whenever profit that you put here. But from the 5th buy, that is what we call extra jara, because only the 5th buy can give you many different profit if the coin doesn't go up and hit the take profit that you instructed the robot to give to you. Okay, so let's give it 7 margin calls. Okay, now first take profit, as I always say, as the first settings, you put 1.5. That is just temporary settings. So if the signal say 2%, you come and change it. Then we do the same thing, 0.1. Here you can allow yourself to be greedy. You can put 0.2 or even 0.3, but let me limit it to 0.1. Okay, 0.1 and 0.1. Then always on one shot, because we are doing it for one shot. Now, the first buy amount $10. Okay, we want it to go for 7 rounds. Remember, all the settings that you are going to do or you did in the past, you can increase it as much as possible if the money is available, the cash, which is the USDT, is available in your exchange, but don't overtrade. If you are making each strategy, or you are picking a coin according to a strategy, you have to calculate the money that remain in your exchange. Then you go for, if 1 coin or 2 coins. If I'm picking a strategy of 200, it means that 200, I'm not going to use it for any other coin as far as it is on a one trade. Even though the robot is only going to take $50 or $30 or 100, don't you use that same 200 to go and buy another coin, because you see that the robot is not using also. Let me go and take it because he's not using. Why won't I take it? It is wasting of money, leaving it there doing anything. What crypto hates is when you borrow money from that crypto at that same moment, it will start falling down. Now the robot will come and tell you, Oga, I beg, that 200 that you borrow, I beg, bring it back home because the coin is falling down. I need it to buy. That is the automatic message that you will receive in your Royal assets. Okay, so now let's go. So let's go to the margin configuration here. So what we are coming to do is what we call the Fibonacci. Fibonacci means the previous results, you add it to the next one and get what we call the future results. It means the previous one, I'll add it to this one to get the results that I'll put on the next. I always add this result to the past, then I'll get it here. This result to the past result, then I'll get the next result that I'm supposed to put. So for example, let me do here the same thing. You can do the 0.5 or even 1% or 1.5, but you have to make sure to increase the next call for it to be higher than the previous call. So it depends on what you want to put or what the signal says. Okay. So you can even say here 1%, the next 1.2, or here 1.3. It's up to you. 1.4, here 1.5. Then the 6 and 7, you can say, for example, here I want 2%, then here I will put 2.5. So if you see that the coin is not going in your direction, then you can come and increase the next calls to slow down the robot, to not use faster your money, and also to make you get more pieces of that coin at a cheaper rate. Okay, so here is it now, this part. So let's calculate with here. First drop one time. Okay, now 1 plus 1, 1 plus 1 here will give you 2. So the second drop, you make 2 times. Okay, you see, we are now starting at Fibonacci. Now, for you to get the third result, you add this plus this. You add the 2 together. So what you will get is what? 3. Then the next one, you put 3. Okay, then for you to get this place, you have to add here plus here. Okay, 3 plus 2 will give you 5. Then you put here 5. This is how you calculate the Fibonacci strategy. Then the next, for you to get here, you have to add this plus this. 5 plus 3 will give you 8. Then you put 8 here. Okay, you put 8. Remember, you are doing it according to your money. According to your money. So let's calculate these 3 results. 1, 2, 3. Sorry, 1, 2, 3, 4. Wait. I am mistaken here. Here is 1. Sorry, here is 1. Okay, then 1 plus 1 here is 2. Then 2 plus 1 making 3 here. Okay, then 3 plus 2 making 5. Okay, 5. So you see, from first to the fourth call, you can make the Fibonacci settings here. Okay, from first to the fourth call. Now, if your money can allow you to continue, then you make here 5 plus 3, that is going to give you 8. Okay, so let's calculate the first 5 margin calls and see how much. So 1 plus 2 making 3. Okay, plus 3 making 5, plus 5 making 10, plus 10 making 18. So this first 5 margin calls is going to give you 18 as results. So you multiply the 18 times your first buy amount, which is 10, So 10 times 18 is giving you 180, 180 plus the first buy amount 10, which is giving you $190. Are you getting it? $190. So from here to the, from this part, which is the first call, to the fifth call is going to give you $190. $190. So let's say you have 200, then $190. Your money will remain how much? 20. So the $20, you can either decide to put it here, or you can open more 2 extra margin calls. So if you want to open 2 extra margin calls, then here you can put here, down here. Remember, I say you do it according to your money. Here, as the margin call is 7, you can put 2 times here. So it means 180 here. Okay, sorry, 190 here plus 10. Then it means 1 time, because 1 times 10 making 1 time. Have you understood it? So let's calculate. Here is 1 plus 8, 9. Okay, 9 plus 8 making 17, plus 5 making 17 plus 5 making 22, plus 3, 25, plus 2, 27, plus 1, giving 28. So let's see. Let's go and calculate it. Let's go and calculate in the calculator. Let's see. Let's see here before we do the mistake. So here we are going to say sorry for that. 1 plus 2. Okay. 1 plus 2 plus 1 plus 2 is giving us 3, okay? Then 3 plus 2 is giving us 5. Then 5 plus 3 is giving us 8. 8, so let's calculate it. It's giving us 8. So 8 here, 8 times, yeah, it's giving us 8. So the total profit is 19. Then let's multiply 19 times the first buy amount, $10, which is going to give us, okay, it's going to give us 190. So it means here the first 4 margin calls, the first 4 margin calls here, sorry, the first 4 margin calls is 8. Then here we put 1. We put 1 here. So it means we have to reduce for we to get the exactly $200. Then we have to make the margin call limit to 6 here, to 6, because here, and the first one is giving us 19. 19 times 10, which is 190. 190 plus $10 here, which is 1 time, it will give us 200. So when you do, you can take a screenshot. You have to cancel this and you put 6 margin calls. So let me confirm it and go and reduce here to put 6 margin calls, okay? 6 margin calls, then I'm going back to the margin configuration. So I do here 1, here I do 2, here I do 3, here I do 5, here I do 8, okay? I do 8, then here I do 1. So the total amount will be 200. Then I come here and I do the settings as I did before. 1.2, 1.3, 1.4, 1.5. Okay, I can make here 2%, then here 2.5. Okay, then I save it. And the same apply to this distribute and take profit allocation. You leave the default settings like that, but if the coin goes deeply down against your direction, then you come and increase here to 1.5 or even 2% for you to enjoy the sub sell. So here the total amount, the Fibonacci strategy, we put 200, okay? 200 capital. You see, 200 capital. Then you save it. Okay, so if you have less than 200, everything is doable. Then you have to reduce your take profit, your first buy amount to $5 because you are dividing it into 2. So if you divide 200 into 2, it will give you $100. So by putting $5 here, it means this Fibonacci settings will take you $100 as capital to use on your choice of coin that you want to trade. I hope the message is clear. So now we come and save it. So we have the here the Fibonacci settings. We have here the double up settings. Okay. So you see the double up settings, the first buy amount is small, $5, because if you do $10, it will take you 400. Then here we make the first buy amount $10. So I hope the second strategy you have understood it. Have you understood it? Have you understood it? Now, I want to reply some 1 or 2 questions. I got it, thanks. Which is better to have few margin calls or many for the case of getting more profit? If your money can allow you to use more margin call, as I said, ladies and gentlemen, if your money can allow you, you have put either 5 or whatever margin call it is. Okay, and the coin is dipping down and the robot has stopped the margin call. If you have money, you add the fund, you buy it, you have nothing to lose because it means the coin is getting cheaper than what you expected in the market. So why not buying the dip at a cheaper price to get more of that coin and eat more profit from it? So you can add up the margin cost if you have the money. But if your money is limited, don't force yourself. You just need to have the patience. Once it hits the trigger profit that you instructed your robot to sell, it will sell for you. So this is the, how do you call it? The two strategies, which is double up and Fibonacci. Now let's go to the third one, which is the 1+1. Okay, that one is for those who have really, really small capital. You know, in Royal Q, you can allow yourself with even small capital and trade. So you tap again on the plus. Now we are going to give it a try, either 10 or 5 or 20, but it is up to you to multiply it or to divide it. I repeat, the strategy that we are using, if your money is less than that, then you divide the money into two, which is the first buy amount. If you have more than that, then you double it. Very simple as that. Okay, so here let's do first buy amount. We do $10. So I'll make here 1+1 strategy. 1+1 strategy. You see, 1+1 strategy. Okay, then you give it an embed. Let's not put the money first. Let's calculate it and see how much will be the total. Then we come and put. So let's start with $10. $10 as first buy amount. Then let's leave the default settings, which is 7 margin costs. Okay. So if you do it either 7 or 5 or whatever it is, if it goes against you, you can increase if you have extra funds. So here I will put 1.5 and the same settings 0.1, 0.1, 0.1. Then here I'll put it on one shot. So let's go to the margin configuration. So 1+1 means you are adding 1 on each next buy. You are adding 1 on each next buy. So let's do the right side, then we go to the left side. So here it means after you buy $10, the next buy may you buy 1 time, which is 1 times 10, $10. Then the next buy, I'll add 1 on the 1. It will be 2 times, which is how do you call it? $20. The next one will be 3 times, which is $30. The next one will be 4 times, which is $40. So you see, this is what we call the 1+1. I add 1 to here to get 2. I add 1 here to get 3. I add 1 here to get 4. I add 1 here to get 5. Okay. So let's say the first 4 margin call. Let's see how much will it take. The first 4 margin calls. First buy is 10. Okay, 10 plus 10 here 1 time, which is 20, plus 2 here, which is 20 plus 20, 40. Okay, plus 3 here, 40 plus 30, making how much? 70. 70 plus 40, making $110. So here, the first 4 margin costs will take you in total amount $110. So you have to know that here is $110. So if the money that you decide to invest on that your future crypto, you know that maybe it's 150 or 130, then you take the remaining amount apart from that 110 to share it here, as simple as that. Okay, so 1, 3, 3 plus 3, 6 plus 4, 10. So here it means it is $100. If your first buy amount is 10, this part will take you $100 plus the first buy amount 10, which is $110. So the 4 margin costs $110. Then it's up to you to add here to complete the 7 margin costs. So if you want to add 10, 10, 10, which is 30. So 110 plus 30, making 140. So let's put here 1 time, okay? According to your money, as I said, 1 time. The most important is here, the first 4 margin call. Now, if your money can also allow you to continue, 4 plus 1, you put 5. 5 plus 1, you put 6, according to what you have, okay? So let's limit it to 1, how do you call it? 110 plus 30, making 140. So, sorry, the total amount here on the 7 margin call will take you $140, which is first buy amount $10. Now, if you don't have $140 and you have half of $140, then you make first buy amount 5. Then it will take half of 140, which is $70 to use on the whole entire 7 margin cost, which is $70. Okay. Then here we do the same thing. 1 plus 2, according to the signal, 1.3, 1.4, 1.5, 1.5 here you can make 2%, then here 2.5, because remember, the market doesn't belong to anybody. So you have to also be prepared. The market must not be your friend. Don't say, this guy, I trust it because Leader Aminata said, because Coach Musa said, or Brother Emmanuel or Leader Doris said, it will deliver in fast way. So make I limit myself. No, you have to prepare yourself to the worst. Okay. So you come here and you save it. So this strategy here is 140 capital. Okay. 140 capital, you give it a name, then bingo, you save it. Then you are good to go. So you see the 3 strategies are there. If the day I have 200 to do, then I come and take 200. The best one is the double up. The best one. Then after the best one, it is this. After this, it is the 1 plus 1. Okay? Then you save it. So once you save it, you are now good to go. You are good to go. Let me see, how will I remove this? So this is the strategy, the 3 different strategies. So let me share here to show you what I mean. For example, when you tap on a coin, you want to buy a coin. Let's pick Aave. You see, here is showing you create. You tap on create. This is what I mean. You see, the robot is telling you, anytime you come here, it automatically puts you here. The Matringer strategy board. It means the default settings of the robot, which is the double up. You can ask the question to GPT chat. It will explain to you. So you see that one is the best. Then you are good to go. So I think I am done here. I have done for the explanation. So let me see in the chat if there are 1 or 2 questions. Then I will reply it and we will close the sessions. Okay, so let me read the questions. Let me see up there whether there are questions. Okay, let's scroll down. Okay, but if have noted that I only get the take profit set and nothing more, yet I set my whole position take profit as 0.1. The trade closed instantly at the take profit. Yeah, I will explain to you. If you set the take profit, let's go here. For example, here you say it because by setting that 0.1, it doesn't mean it will by force give you the more extra profit. This 0.1, if you put it here, it means sometimes the coin will hit that. For example, here on the paper that I'm trading, I put 10% because I have made my analysis and I know that it will get there. So as my second name is Super Extra Pro Patience, I put the 10% and I'm waiting for it. I have nothing to lose because it is the spot market. So you see this 10%, I have put 0.1. So let's say the take profit hit the 10% and it didn't go beyond the 10%. So if it hit the 10% and it's falling down, the robot will remove this 0.1 from the 10% and give me 9.99. But if the coin goes above the 10%, then I will win more than the 10%. So maybe your settings that you do or you did, it mostly hit the percentage, the exact percentage before it falls down. So if you want more, you can put 0.2 or 0.3. But it means if it hit that exacted profit before it starts dropping down, then the robot will minus this number of percentage that you put here from your take profit. I hope it is clear. So now let's go to the next question. Okay, let's see. Okay, very clear. Let's see. According to the signal drop, 5 to 10%. Yeah, then you divide your call drop into 5 to 10% as it says. Okay. So next question here. Okay, because the coin didn't push much higher than the set price, but you can change it, then you will see how it performs. Yes, exactly. Okay, so can you use the strategy for both spot and future? You can use it for both spot and future, but in future, remember it is fire. So if you are setting your strategy, remember in future, in your future account, you have to make sure to have maintenance amount of money, meaning I'm maintaining the trade for if it is going against me, for me to push back the liquidation price to the current price. Because if the coin is going against you, remember the leverage that you put means you are signing contract. I have $100, my 1%. I know that 1% is $1, but by multiplying the leverage, then it means I want Binance or whatever exchange I'm using to give me that my $1 times 10. So I have to put in my mind that the $1 times 10, which is $10, if the coin is going against me, that same $1 times 10 will be removing from my money. So I need to have extra money there that will be maintaining my trade until the coin will hit. So in the future settings, you have to limit your margin cost. Don't do more, don't do much, because the more margin cost the robot will be buying, it means it will be using your money to buy. So if you want to use more margin cost, you have to also think about the maintenance money that you're supposed to leave there as extra money. Okay? Okay. Okay, please. I don't know whether the person, Grace, you came late, but I have explained it. So I cannot go back. I'm sorry. Maybe it will be for next Zoom. Okay, please, ma. Hope we will get the replay of the session. Yes, my colleague will put it. My partner training. It will be on. How do we call it? Can someone remind me the name? Royalty Revolution or Crypto Revolution, something like that. So we will drop it in the group. So if you are in one of our groups, you will get it there, because all the Zooms that we do, we make sure to repeat it for those one who couldn't come to get the record one. Okay, so that is it. So I hope I have replied. Can I pick a coin from 24 hours change to trade on future and use this settings? I don't get your question. You can use the settings. I have already replied, I think. I said if you are using the settings or your strategy, you have to always think about extra amount of money in your future account. Don't leave that limit. I have $100. I don't supposed to do $100 strategy. My capital in my exchange, which is future account, I'm not talking about the overview, because in your Binance, you have the overview side, the spot, the future, and the funding, not in the overview. Because some of you, when they say check your cash in the exchange, you go and limit yourself on overview. Overview means the total asset, both my cryptos and my cash. How much is it? That is that overview part. But in your trading, if you want to be specific, in my future account, when you tap on future, if I have $100, that I have to make sure to make strategy of maximum $40 or 30, then the 70 or 60 must be there as maintenance money, period. Because if you are over trading above what you have in your exchange, it will lead you to fast liquidation. I hope I have replied to you. In future, can I have 1 to 3 margin calls? Yes, of course, you can have 1 to 3 margin calls. So thank you very much, ladies and gentlemen, for being here. Thank you very much for giving me your precious time and also to listen to what I had to share to you. May God bless you all. I wish you a great and wonderful weekend ahead. We'll see next time for the next session. Bye and Viva Royal Q. Thank you.